AerCap Inc. is still undervalued. Yes, ladies and gentlemen, you heard that correctly. I've made a few videos on this company. It's super interesting. This is the Aer Stock Analysis. That is the ticker symbol for AerCap Inc. This is StockerFinance, and I'm your host, David Scheuer. Make sure to check out my Twitter, twitter.com/StockerFinance. Got some good stuff going on over there, as well as the newsletter link will be in the link in the description, as well as it'll be on the pinned comment below. So let's go ahead and dive right into the video. Here's my thesis and just the overall summary for this analysis. First off, this company is fundamentally still undervalued. Yes, it's still undervalued, even from the increase in price since the last video and the first video I made on this company. Number two, has stable cash flows coming for years, has highly experienced management with a track record of success. The economy is also recovering and continuing to recover with increased airline flights. On top of that, leasing aircraft is more prevalent than ever before, and we'll talk about that a little bit as well. So let's go ahead and just look at the overall chart here in the graph. We're looking at a 13% increase in the last 5 days, currently trading around $50 a share with a market cap of $6.48 billion. 52-week high of $58.20, so it's still below that. 52-week low of $10.42, which is recovered from immensely. If we keep going on here, it's still down from its book value of around $60, and I'll touch on the book value of this company in a little bit. It's down about 20% still, which is still just astonishing for this company, but it's been slowly recovering to match its pre-coronavirus value. On top of this, since the video I made on June 25th, 2020, it's up about 73.46% since that video came out. So it definitely feels good for that analysis. But on top of that, it's not done yet. There's still a 20% potential increase in this company simply based on fundamental analysis, simply based on the book value of this company, as well as the increasing recovery of the company in the economy as a whole. Now let's go over some highlights from its last quarterly report. First off, let's talk about its cash flow. So cash flow from operating activities was $541 million. That increased 76% from the second quarter of 2020. New deferral requests in the third quarter were lower than the second quarter. That's a good sign, with deferral notes receivable increasing by only $56 million during the third quarter. Has a very strong balance sheet, and we're going to talk about the balance sheet a lot for this company. And AerCap ended the third quarter with over $11 billion in total sources of liquidity, representing a record next 12-month sources to uses coverage ratio of 2.9, adjusted debt to equity ratio of 2.67 to 1, below the company's target of 2.7 to 1. Secured debt to total assets ratio of 24%. Now keep in mind, that's a pretty high debt to equity ratio. When you're talking about just a standard company out there on the especially for, standard public company or any company for that matter. But this is a company dealing with very large purchases. Let's talk about real estate companies for a second. You go and buy a $2 million building. Generally, you're not going to buy that building with cash unless you just have the cash on hand and are able, your company's able to do that. But this company, well, they're able to leverage debt and then rent out their planes and lease their planes. And if the income pays off the mortgage, then plus some extra, then they're go ahead and they're going to make some cash flow and some income from that little profit there. So really interesting when you're dealing with airplanes because they're such large priced items, is what I'm trying to say. So for this industry, that debt to equity ratio is actually quite good and quite healthy. It's nothing too concerning. If it was 5 to 1 or 6 to 1, or even honestly, if it was 4 to 1, I'd be a lot more concerned. But 2.67 to 1, which is even below the company's target of 2.7 to 1, is a very healthy debt to equity ratio for this industry and for this company. Now, I really quickly want to touch on the airline business versus aircraft leasing business, because one of the most misunderstood issues with this company and aircraft leasing stocks in general. Many people treat them like an airline company, and that's part of the reason this company crashed so hard. The company's stock crashed so hard back in March because the whole airline industry is getting decimated, but the aircraft leasing industry is a whole different business. So here's an article, and he says, in my opinion, investors overestimate the correlation between the airline business and the aircraft leasing business. In market downturns, investors dump anything airline related. AerCap lost 3/4 of their value. As I was just saying, it's a crazy crash back in March, as we saw from the coronavirus, from its peak to its trough in March 2020. The market seems to forget that aircraft lessors are by far not as much influenced by short-term crisis airlines. That's because the average leasing contract for this company is 7.3 years on average. So even though the coronavirus, whole situation has been going on for about a year now, and it's been almost a year since that crash. It happened right around this time, actually. Valentine's Day is when the market crash started to take place, and it really took fold throughout March. But during that time period, their lease is 7.3. These companies can't just cancel their leases. Bankruptcy of airlines has been a small issue for this company, but still, it's not a substantial issue that's detrimental to the company's bottom line. So as long as a substantial number of airlines who are customers of aircraft don't file for bankruptcy, the airlines are obliged to pay these lease rents regardless of the economic condition, and on average, they're paying these leases for the next 7.3 years. So unless the market, unless airline flights are down significantly and stay at where they were for the coronavirus, and airlines are just decimating, coronavirus is still around for 7.3 years from now, which I don't think will happen. I think I'm not even being optimistic. I think I'm being pretty conservative in that guess there, that estimate there. Then this company is in a pretty great position right now. So therefore, AerCap's earnings remain relatively even in economic downturns. This is shown by the high and stable aircraft utilization rate in the past. Now let's touch on the management. As Warren Buffett states, management is one of the most important parts of a company, and it's especially important for a company like this who is dealing with a very stressful situation back in March, dealing with some airlines, not many, going bankrupt, and dealing with a lot of people viewing this company as an airline and valuing it as an airline rather than an aircraft leasing company, which is totally different. I just want to reiterate that. So the management of AerCap is highly experienced and has shown its strategic intelligence in the past. Some noteworthy achievements were the restructuring of aircraft portfolio, managing high debt levels, and the constant growth of revenue, net income, and book value, as seen in Figure 2. We'll talk about net income and book value in a bit. So Angus Kelly is the CEO. Sorry if I pronounced his name wrong, by the way. Since 2011, he holds more than 10% of the company, not 10%, 8% of the company. The other management members have been part of the management for many years and or have an aircraft-related background. Therefore, the success of the last years can be attributed to the current management. One can expect that the AerCap will be managed professionally in the future, which is crucial for the company's long-term success. If you take a look at its stock chart, and I know, I don't like to necessarily value companies simply based off a stock chart. In fact, you should never do that. You should always look at its numbers, what it's doing, its management, the value it's providing to customers, etc., or the product it's providing to customers. But if you look at that, you'll notice its immense growth through recessions, through time over the past 5 to 10 years. This company's experienced great steady growth for its shareholders and just great returns for its shareholders. And that's a sign of excellent management. So one can expect that AerCap will be managed professionally in the future, which is crucial for the company's long-term success. In total, insiders hold 4% of AerCap. This aligns the shareholders' interest with the ones of the insiders. It also shows that insiders believe in their own company, which is always a great sign. So anyways, let's move on here. Let's dive into the numbers. Let's look at some revenues and other income. We see that revenue has slightly decreased from 2019, but again, it's relatively steady. You would expect if this was an airline that revenue would plummet because there's no flights. But again, this is not an airline. It is a leasing company. And one way it's able to make up for some of that lost revenue is through maintenance revenue. So all these airlines have these planes they're leasing out, and now they're like, well, we need to park them somewhere. We need them to be taken care of because no one's flying them. We don't want to be flying one person on the aircraft at a time. We're going to lose tons of money, so we might as well just store them somewhere. So what they're doing is giving them back to AerCap, and AerCap saying, okay, yeah, we'll take them, but we're going to charge you maintenance, and we're going to charge you storage fees for your aircraft on top of your lease payment. And that's why we see from 2019 to 2020, maintenance, rents, and other receipts increased pretty substantially by over 25%. So that's a great sign for this company that they're able to profit from that. Even if airlines are suffering, this company can continue to thrive. We did see a small drop in basic lease rents. That could be because an airline went bankrupt. I'm not paying attention to every single airline this company is dealing with. My guess is a few smaller airlines that were, maybe they were doing really specific niche areas throughout the world, and they ended up, this company operates in over 80 countries, by the way. So perhaps though a few companies went bankrupt there, but again, no huge customers of this company went bankrupt, especially a lot of the United States customers, which is a big portion of this company's revenue. So basic lease rents were $897 million for the third quarter of 2020 compared with 1,067. So it's $897 million to $1,067 million for the same period in 2019. The decrease was primarily due to lease restructuring, transitions, and the impact of airline bankruptcies, as I was talking about. Maintenance, rents, and other receipts were $91 million for the third quarter compared to $73 million. We already kind of touched on that already. Net gain on sale of assets for the third quarter of 2020 was $7 million, relating to 7 aircraft sold for $63 million. This company also buys and sells aircraft, obviously, but what it also does is trades aircraft. So besides just buying them and leasing them out, it also operates in trading them. Buying an aircraft, let's say an airline goes bankrupt and they need to liquidate all of their assets. What they're going to do is go ahead and sell a bunch of their aircraft for pretty much a break-even price to at least hope they just get their money back because their company is going out of business and they don't want to lose and have to, pay back their shareholders, their investors a ton of money. So they sell their aircraft for a small profit, or let's say even sometimes for less than the value, or just to break even. Well, AerCap can come in, pick up these aircraft for relatively cheap, and then resell them back to other airlines or companies who then it profits for AerCap, which is great there. So that related to 7 aircraft sold for $63 million compared to $41 million for the same period in 2019. So they're doing a lot more aircraft trading right now, relating to 19 aircraft sold for $561 million. The decrease was primarily due to the lower volume and composition of asset sales. Sorry, I meant to say they're decreasing, not increase there. Kind of misspoke. Other income for the third quarter of 2020 was $31 million. However, even though it did decrease there, primarily due to the lower volume and composition of asset sales, I actually think in the future, because of some liquidation of airlines and some bankruptcies, we could see this segment of AerCap's business increase because they're going to be able to pick up more aircraft for cheaper prices because these companies just want these aircraft off of their hands. They don't want to have to keep paying for the maintenance of them, or they're just going bankrupt and need to liquidate, as I stated. So I won't be surprised if this segment of their business starts to increase pretty substantially within a year or two, especially if some companies still can't make it, or if the airline industry just doesn't recover enough over the next year or so. So other income for the third quarter of 2020 was $31 million compared to $14 million for the same period in 2019. The increase was primarily driven by higher interest income. So now let's talk about the Boeing 737 as well as their aircraft portfolio. So following the fatal accidents of 2 Boeing 737 MAX aircraft, the worldwide fleet of these aircraft was grounded by aviation authorities in March 2019, and production was temporarily suspended by Boeing in January 2020, resulting in ongoing delays in the delivery of AerCap's aircraft on order from Boeing. However, as of September 30th, 2020, we had 5 Boeing 737 MAX aircraft delivered and on lease. During the third quarter of 2020, AerCap canceled its orders for 24 Boeing 737 MAX aircraft. That's great that they had the ability to cancel those orders. Having the ability to cancel those orders is great because it gives them flexibility. Because of the coronavirus, they knew that they weren't going to be able to lease out all of these Boeing 737 MAX aircraft anymore, so they just canceled the order. Excellent business decision by this company. It's a sign of good management. So aircraft portfolio. As of September 30th, 2020, AerCap's portfolio consisted of 1,342 aircraft that were owned on or order or managed. The average age of the company's owned fleet, sorry for misspeaking here, as of September 30th, 2020, was 6.3 years, 2.9 years for new technology aircraft, 11.9 years for current technology aircraft, and the average remaining contracted lease term was 7.3 years. Now let's go ahead and look at their income statement here regarding revenues and other income. Slight decrease in revenue. And to be honest, we really already went over this, so I'm just going to kind of skip this part and move on to their net income here. We are losing money right now for this company. So this company went down from $271 million in 2019 to $850 million loss in 2020. And, a lot of that is just due to the fact that some aircraft went bankrupt, whatever it may be, and they're having to recover from that. But as they start to lease out more airlines, as the economy increases, I'm sure that'll turn around. I'm confident in the management of this company, as well as just the business, not the business, but the industry as a whole. So now let's go ahead and look at their balance sheet. In cash and cash equivalents, they have $3 billion. That's up from $1 billion or $1.1 billion in 2019. Restricted cash, that's up from $178 million to $281 million. Trade receivables, up to $189 million. Flight equipment, that's down slightly. That's not that big of a deal, though. Net investment in finance and sales type lease, down slightly. So anyways, cash and cash equivalents is the most important thing on here. Although we do want to look at, if we go down and look at maintenance rights and lease premiums, that's down slightly as well. But other assets are up to $1.3 million. So that's pretty nice there. Their total assets actually increased to $44 million. Now, it's not 44 million, by the way. It's 44 billion. This is in thousands. So just so you guys know, if you see $1 million on this balance sheet, it's actually a billion. And if you see 100,000, it's 100 million. So I just wanted to reiterate that or state that in case anyone's getting confused by my lingo here. Now let's go ahead and look at total assets, increased again to $44 billion. Total liabilities increased to $35 billion. That's good that total assets are increasing, though. If we go ahead and look at adjusted debt, and I already touched on debt a little bit, so I don't need to talk too much about this, but we actually saw a decrease in debt from December 31st, 2019 to September 30th, 2020, from 27 million down to 27 million down to 26 million. With equity decreasing slightly to $8 million. If we go ahead and take a look at their expenses, so this is just general selling and administrative expenses, we actually saw a decrease here from 2019 to 2020. So on 9 months ended, it decreased from $196 million to $178 million, and from 2019 to 2020, 3 months ended, decreased from $65 million to $61 million. That's great that they're cutting costs there, especially with a little bit of financial struggles going on their income statement, but their balance sheet is still looking very solid. If we look at cash and cash equivalents, we already kind of touched on this, so I'm just going to skip through this a little bit because I really want to get to this, which is the book value per ordinary share. Now, I've talked about the net asset value per share of this company quite a bit because it's one of the most compelling arguments for investing in this company. The fact that it's just fundamentally undervalued based on its balance sheet. On top of that, we're seeing its revenue and its income starting to recover, and when it reports earnings, I believe it's March 2nd. So coming up in about a week here, they report earnings. It'll be very interesting to see how their revenue and income has rebounded, or if it hasn't rebounded. That'll be really good to know. But just fundamentally, if you just look at this company's balance sheet, and what we're going to do is we're going to use their shareholders' equity, which is the total assets of this company, and then you subtract the total liabilities, and you divide it by their shares outstanding, which is 127 million shares outstanding, and you get a book value per ordinary share outstanding of $69.06. That's significantly below the $50 the company is currently trading at. So it's a great sign that this company is simply fundamentally overvalued, and the outlook for this company, in my opinion, is also very bright. And so, again, it's trading at $50, but the book value is $69.06. That was down slightly from before, which means that their liabilities have increased a little bit faster than their total assets over the previous quarter. But that's not something that's drastically worrying. If it decreased by, let's say, $5, their book value per ordinary share, that would be a little worrying to me. But the fact that it decreased by just a few cents is not that worrying to me. Now let's talk about the economy a little bit, because I know I've spoken on this throughout this video, but haven't really shown any charts. Let's look at the number of flights performed by the global airline industry over time here. You can tell pre-COVID, it was at 40.3 million. That dropped down to 16.4 million. It dropped more than 50%. But as of 2021, it's beginning to increase to 22.2 million, and I believe once we get some more reports on the number of flights performed by the global airline industry, it's going to be higher than that. As of right now, this graph is a little delayed, so that'll be some good news as well. On top of that, we're seeing unemployment rate here in the United States decrease as well, down to about 6%. That's of January also, so now it's the end of February. We're going to get another report, and that'll be down. I expect it, at least, to decrease even more as the economy starts to open back up in some states. People start to get their jobs back. Companies have also gotten used to doing remote work or completely transitioned to remote work, so they're starting to hire people for that. And I think it's just a good sign for the economy overall. It's a slow recovery, but it is happening, and that's all a good sign for AerCap, because that means more people are going to need to travel for business or to go on vacation. I think a lot of people are going to want to go on vacation after being stuck inside for so long, and that's going to mean that people need to go on more flights, which means that more airlines are going to have more demand for their flights, which means they're going to need to lease more aircraft, which means AerCap Inc. will profit from that and benefit significantly. So anyways, this company is fundamentally undervalued still, despite its about 70% increase since the first video I made on this company. On top of that, the economy's looking bright into the future, which is a good sign for this company with flights increasing. Overall, I'm pretty excited about this company. I don't know. It's just a really interesting kind of company to be looking at. It's just kind of a classic value investment here. Thanks for watching. Please subscribe. I also just want to point out that none of this is financial advice. This is entertainment only. Twitter.com/StockerFinance. Definitely check that out. Check out these videos as well. And the newsletter link will be below. Definitely subscribe. You're going to really like that. I put a lot of work into the newsletter. Anyways, guys, this is StockerFinance. I'm your host, David Scheuer, and I'll see you guys in the next video. Peace out.